In this video I will show you how to open long trades with leverage, how to place stop losses, take profit targets, and also how to open short trades with leverage, also how to place stop losses, take profits. We're gonna cover everything that you need to know, and all of this is on the mobile app, right? So it's for the one of you who wants to learn how to trade from your phone, from your mobile device. If you want to learn how to trade from a desktop, right, on their website where we have other tutorials, in this tutorial we're only gonna cover trading from your mobile phone. To open an account, you first have to download their app from the Google Play Store. This is how it looks like. Once you do that, you can just open the app, click on sign up. Then again, you have to select sign up right here. Add your email address, add password. Then as a referral code, you can use SATS income. You're gonna get some nice bonuses. Agree to their terms and conditions and click on sign up. Okay, so once you have your account ready, you just have to select futures down here from the menu and transfer funds. So to transfer funds, you just scroll down here where it says transfer, click, and you're gonna be transferring from your funding wallet to your USDT M wallet. So you select the asset, it's very likely going to be USDT, then select here the amount that you want to transfer to your futures wallet. Keep in mind that trading futures is very risky, and if you don't really know what you are doing, you might lose all of these funds, right? So start with something small. Also, there is demo trading available, so you can even start that way. Let me actually show you. So if you go to home right here, and if you click on more, demo trading right here, you just have to click on it, start demo trading. It's actually exactly the same. They give you demo funds right here. You see there are like 68,000 available. So you can practice that way right here, opening and closing trades. Everything is exactly the same. I'm not going to show you how to do it in demo trading. I'm going to show you how to open and close trades in real trading. But you can do the same thing. You can start and practice demo trading first just to see how to open trades, how to close trades, how everything works. And then you can move to real trading. So for now, we're going to exit this and go back to futures right here. And before I show you how to open long trades, let's talk about the type of leverage right here and also the amount of leverage. So type of leverage, there are two types, cross and isolated. So cross is pre-selected, and cross means that basically in the event of liquidation, all the funds that you have in your futures wallet right here will be lost. If you select isolated, in the event of a liquidation, you're only gonna lose the margin that is in this specific trade, right, which led to the liquidation. The rest of your funds in your futures wallet are not gonna be affected. So when you are just starting out, it's actually safer to use isolated rather than the cross. When you are already advanced, you can just use cross because liquidation is not really gonna be on the table. When you are an advanced trader, you are managing your risk. You always know what's the worst case scenario. You always trade with stop losses, right? You're always risking just a portion of your funds, right? So liquidation is never really gonna occur when you know what you are doing, but when you're just starting out, it's good to just stick to the isolated margin mode. So select isolated right here, and then next adjust the leverage. You can choose anything from 1x all the way up to 150x. Of course, 150x in your case doesn't make any sense. What makes sense is 1 to 5x, right? You shouldn't really go above that unless you really know what you are doing. If you follow me on social media, you've probably seen a lot of my trades. You've probably seen trades where I use 20, 30, even higher than this leverage. So for example, in this video right here, I'm using like 20x, and the margin that I'm using is not like $100 or $50, right? You see there is like 17K margin right here, but I've been doing this for like 8 years, right? So when you're just starting out, it's not a good idea to use more than 5x. Actually, when you're just starting out, the good idea is to do demo trading, right? Once you gain some experience, you can start trading with real money, but very small amount, like $50, $100, just to get used to it, and just trade with small amount of leverage, like 1 to 5x, so that you don't waste your money. Even though it's not a lot, it's not gonna be a lot, $50, $100, you still don't really want to waste it, right? So don't go like 20x, 50x, 100x. Just go 1 to 5x until you learn how to manage your risk properly. Now, we're gonna move down here to the types of orders. We have 4 different types of orders. We have limit order, market order, advanced limit, and trigger. What are the differences between these orders? Well, we're going to be using limit order when you want to enter a long trade at a lower than the current price. So as you can see, Bitcoin at the moment is at $108,000. In situations where my analysis tells me that Bitcoin will first go lower than this price and then it's going to go up afterwards, right? In situations like this, I'm going to be using limit order, because why entering at the current price $108,000 if I can enter at a lower price, let's say $105,000? I will make more profits if I am patient and if I enter at a lower than the current price. So in these cases, I will enter with a limit order. So I'm gonna add here my price. Let's say that my analysis tells me Bitcoin is gonna go to 105K, and then from there it's gonna go to 112. Well, guess what? I'm gonna put right here $105, which is the entry. Then right here, instead of BTC amount, I will switch this to USDT because it's hard to know the amount of Bitcoin that I want to buy. It's easier to know how much dollars I want to put into this trade, right? So I'm going to switch this again to USDT instead of the BTC, which is the default. And then I'm going to add here the amount. You can see that the minimum amount in this case is $10, right? So I cannot really enter a trade for like $5. I have to do more than 10. So let's do like something like $30. So we have the type of order. We have our entry price, 105K. We have the amount that we want to put in this trade. We are using 3x leverage, which means that we actually gonna spend $10 from our own money, and the other 20 we're gonna borrow it from the exchange, right? So this is what 3x means, and this is what using leverage means. You see right here costs where it shows $10. Well, that's because we use 3x leverage. If I lower this to like 2x, then you see this, the cost changes. In this case, we're going to be using $15 from our own money, and the other 15 we're going to borrow it from the exchange, right? If I lower it to 1, we're not going to use any leverage, we're just going to use our own funds. So the cost for this trade, our cost is $30, and the position size is $30. So in this case, we're not really using any leverage. You can also see the maximum amount that we can put in this trade. In this case, because we are not really using leverage, it's just 1x, the maximum amount that we can put is like $31.50. If we go back to like 3x, you will see that now our maximum amount that we can put in this trade increase. Right now it's $115. So if you want to enter a position with more money than you actually have, right, available, then you're gonna be using leverage, right? And you adjust right here. So if we increase this to 5x, you see now we can enter $189 position size, and we only have available $39, right? So in this case, we're gonna be using like 5x leverage. What's also important is to keep an eye here on the liquidation price. You see that the higher the leverage, right, the lower the liquidation price is. There is a liquidation price for a long trade and for a short trade. The point is that the higher the leverage, the closer the liquidation price will be to the current price, right? The last thing that I want to show you before we open the trade is the take profit and stop loss. You see this TPSL function right here. If you just enable this, you will see here two fields where you can actually add your take profit price and your stop loss price. So our plan is to enter a long trade at $105,000, right? So our analysis tells us that Bitcoin is going to go down to 105, and then let's say that we believe it's going to go up to 112. Well, guess what? For a take profit price, we're going to put $112,000. What about for a stop loss price? You guys have to remember that you must always use stop losses. Never really trade without stop losses. And the stop loss price is something that you should know in advance before entering your trade, right? That's why I'm showing it to you before entering the trade in this case as well, right? So our entry is 105. Let's say that at 104, our analysis gets invalidated and we don't really want to be in this trade any longer, right? So for a stop loss price, that's what you're going to put right here. Once you are done with all of this, all you have to do is click buy long. Check again here if everything is correct, right? So the margin mode, by the way, the margin mode is supposed to be isolated, so that's why it's always good to check. So margin mode isolated, we have here the limit by 3x, we have the amount, we have the order price. You see here the estimated liquidation price. Now they are showing the estimated liquidation price. Actually, I want to show you now what I wanted to show you earlier, that when you increase the leverage, right, the liquidation price will actually increase. You see now the liquidation price went up to $97,000. If I increase it more, let's say 20x leverage, now it's $100,000, right? The higher the leverage, the closer the liquidation price goes to the current price, right, or to your entry price. So that's why I don't suggest you guys again to use very high leverage, because you can get liquidated and you can lose your funds. By the way, one more thing that I want to show you. In this case, even if we use 20x leverage, right, we are not really in any danger because our liquidation price is $100,000. But guess what? We have a stop loss at $104,000. So before we actually get liquidated, we're gonna be stopped out, which makes the liquidation impossible, right? The liquidation is not even on the table because we're gonna be stopped out of this trade long before the liquidation price is reached. That's why, like I mentioned in the beginning, when you're already an advanced trader and you always trade with stop losses and risk management and everything, you can use the cross margin mode as well, right, to make things easier for you, because you're never really gonna get liquidated if you are doing it properly. You see, in this case, if we can even use higher leverage. Let's go to something like 30x to see what the liquidation price is gonna be. Where for the 30x leverage, our liquidation price is still way below our stop loss price. So again, there is zero chance for us to get liquidated right here, because we're gonna be stopped out before this liquidation price is reached. Now let's bring this back lower, because we don't really need such high of a leverage. We're gonna do something like 4x. Buy long, check everything once again right here. Make sure everything is as you want it to be. Take profit, trigger $112,000. Stop loss, trigger $104,000. Confirm. Once you click confirm, you will see right here open orders. Now, what you can see here, guys, there is a position stop and there is open order stop. What is the difference? Well, the difference is that in open orders, these are just orders that are just basically placed on the exchange, but these are not active trades. This is an order that is not yet filled, and it's only gonna get filled if Bitcoin actually goes down to the order price right here, which is $105,000. If for some reason Bitcoin skyrockets from here and never goes down to $105,000, we're never really gonna enter this trade. This order will just stay here forever until you cancel it. What's also important to know that you are not really charged anything for this order. This is just an open order. You're only gonna be charged when this order actually gets filled. The moment this order gets filled, you're gonna be charged trading fees, right? And you're also gonna start to pay funding fees for the leverage you use. That's very important for you guys to understand. As a trader, you have to think of yourself as a business owner, right? And as a business owner, you have to know what your expenses are, what your revenue is, and what your profit is, right? You cannot run a business without knowing the expenses and without keeping track of the expenses and without managing the expenses, right? Because you're gonna go bankrupt. You're just gonna lose your money. The same is in trading. You have to understand that you have expenses in this business. Nothing is free, right? You have trading fees and funding fees. These are your main expenses when you trade futures. The trading fees you pay it when you open a trade and when you close a trade, while the funding fees you pay while you are holding a trade, right? The good thing about the funding fee is that sometimes you actually get paid the fee, right? It really depends on the market and on which side of the market you are, if you are trading long or short. Because the funding fee is being paid from one side of traders to the other side of traders, from the traders who are trading long to the traders who are trading short, or from traders who are trading short to the traders who are trading long. So sometimes you pay the fee, sometimes you get paid the fee. The calculation of the fee is done every 8 hours, right? So if you hold a trade for 1 day for 24 hours, 4 times every 8 hours, there's gonna be a calculation and the funding rate will be adjusted. You can see the funding rate right here at the top where it says funding countdown. The rate at the moment is 0.0049%, right? And the countdown shows the next time the funding rate will adjust, right? So this will happen after 5 hours and 45 minutes. This, like I mentioned, is only for trades that are active, for positions that are active right here. For open orders, you are not really charged anything, right? You're not charged trading fees, you are not charged funding fees. This open order is sitting here for free, right? And it will sit here forever for free if it never gets executed. Now, I want to show you how to enter a trade with a market order, because when you enter a trade with a market order, it goes straight into the positions right here. It doesn't go into the open orders, because when you use market order, you are basically buying. If you are entering long trades, you are buying from the first sellers right here. These, by the way, are the sellers right here that you can see, the red one in the order book. These are the sellers. These are the buyers right here, the green one. So when you are entering a long trade with a market order, you are essentially buying from the first sellers right here. When you are entering a short trade with the market order, you are basically selling, you are dumping to the first buyers right here. That's why when you use market orders, you see here there is not even an option to enter the price at which you want to buy, because when you use market order, you are buying at the current price. So you only have the option to add the amount. Let's add again $30. We're gonna enter another $30 trade. So we have the amount, we have the take profit right here and stop loss. So for take profit, we're gonna do $112,000, and for stop loss we can do $107,000. So now when I click buy here, they will ask me once again to confirm the order, so we have to make sure everything is alright. You see here we have the liquidation price is very far from our stop loss trigger, from our stop loss, so liquidation is not really on the table at all. Now the moment I click confirm, what you guys are gonna see is that this right away went into the positions, right? So this now is an open trade. I got charged trading fees for this trade, and now I'm going to be charged funding fees, right? Because this is an open trade. If I go to the open orders, you can see that we have something here also, right? Earlier we had just one open order, now we have two. Why? Well, because here we have the take profit and the stop loss for this trade. We have $112,000 take profit target and $107,000 stop loss price. So now one of the two things will happen. Either this trade will go in our favor, it will go to $112,000 and we're gonna make money. It's gonna be closed automatically, right? Because we have here the open order that's sitting on the exchange. Or the trade will go against us, it will go down to $107,000 and we're gonna be stopped out and we're gonna lose a little bit of money. What's important for you guys to understand is that this is an OCO order, which means one cancels the other. These are not two separate orders, this is just one order. So whichever happens first, the other order which is left is gonna be cancelled, right? So if the trade goes against us and it goes down to $107,000, this order will be cancelled, right? It's no longer going to be on the exchange. Or if the opposite scenario happens where Bitcoin actually pumps from here, it goes up to $112,000, this order will be triggered, right? It will be executed, and this one then will be cancelled. There is no scenario where both orders will be executed, and that's actually what we want, right? Because we don't want both orders to be executed, we just want whichever happens first to be executed and to cancel the other. Going back to the position right here, you have a lot of flexibility here. What do I mean by that? Well, you see here we have margin $5.40 and we have liquidation price $81,298. Well, I can actually manage this liquidation price. I can increase it or decrease it by adding or removing margin. And you do this by clicking right here. So if I want to add margin, let's say I want to add $10 more to this trade. If I do this, you will see now that the liquidation went down to $31,000, right? So by adding more margin to your position, you are decreasing the liquidation price. And by removing margin, you are increasing the liquidation price. The liquidation price goes closer to your trade. So if I go right here and if I remove $10, right, now you will see that the liquidation price will go back to $81,000. You can also change your take profit and stop loss prices, right? If you click right here, you can modify, right? And you can change the trigger for the take profit as well as the trigger for the stop loss. And lastly, if you just want to close your trade at the current price, you can just click right here, close, confirm, and you will be out of this trade. And also you see that your other order for like your take profit and stop loss will be cancelled as well automatically. So that's how you enter long trade. Now what about short trade? Let's first talk about opening short trade with a limit order. You're basically gonna open short trade with a limit order when you want to enter at a higher than the current price, right? So the current price is 108,000. Let's say that you want to enter at like 110,000. So your analysis tells you that BTC will go to $110,000 and then it will dump, where we're going to be using limit order in this case. The next thing to do right here is to add the amount. We're going to do $30 again. And of course, add take profit and stop loss. So for take profit, we're going to do something like $104,000. You see that in this case, when it comes to short trading, your take profit will actually be lower than the current price, right? Because when you are trading short, you are betting that the market is going to go down, right? And you make money when the market dumps, when the market goes down. That's why the take profit is lower and the stop loss on the other side is higher. So if the market actually goes up, you are losing money. I have to put here higher because 110 is our entry. So if the market goes up from your entry, you are actually losing money. Right, so we have the take profit, the stop loss. Now all we have to do is to click on sell short and bam, our order will be right here. This again is an open order. This is not an active trade and it's not gonna be until Bitcoin goes up to $110,000 where our order gets triggered, right? That's the only time we're gonna enter this trade. If BTC goes down from here and it never goes up to $110,000, this order will just stay here forever. If you wanna enter at the current price, you're gonna be using a market order. So let me show you how to do this. We're gonna enter again a $30 trade. Take profit, let's say it's $105,000. Stop loss $110,000, right? Sell short, confirm. And now you can see we have here an open trade. Our liquidation price in this case is $134,000. We can again adjust the liquidation price by adding or removing margin. So let's say that we want to add some margin right here. You see the liquidation price went up $158,000. If we need the margin to enter some other trade, we can actually remove it from here, right? We can remove some of it, and you see the liquidation price will go lower. In this case, we just remove like 10% of the margin. Let me just remove like in dollars, $5 or something like that. So we're gonna add here the amount, $4 or $3. And now you see the liquidation price is down to $138,000. For short trades, you can also adjust your take profits and stop loss at any time from here, and you can close your trade at any time. You just have to click on close, confirm, and that's it, you are out.